Hello traders, so the title of this video is Fibonacci Trader Shares More Practical Fibonacci Trading Tips and Tricks. Alright, so we're going to go through the financial instrument that we are analyzing today is AFLAC Incorporated. Is that a correct pronunciation? The EPIC is AFL, Alpha Foxtrot Lima. This is an American stock. Alright, so but the video is about practical Fibonacci trading tips and tricks. It's useful for technical traders that want to learn more about Fibonacci trading, and also useful to traders or investors that are trading this particular stock. Alright, so you can see that there was a trend that has started since 1984. Were you born that year? Alright, let us know in the comment section. And that trend, okay, it has ended here. Alright, what is happening now? Traders that are following us at 24 Elliott Waves YouTube channel, we say that there is a correction taking place. Alright, right here. Now we are not going to talk about Elliott Wave here. We're going to talk about Fibonacci trading. So as a Fibonacci trader, there was a trend, alright, and there is a pullback, alright. So now the price breaks above this high here. You will now, as the price goes above this high after the pullback, you will start using Fibonacci extension. That's what I've done here. Put it from here down to this point here. I have my Fibonacci extension. So as I explained to traders, if the price breaks above the prior high, the next challenge for the financial instrument after all these years of trading fail and a pullback, once it goes above this high here, you see how it breaks above it and retests it here. That's what the price is doing all the time. It breaks above the prior high and retests it here, and the common center line is kaput. If the price continues to go up, the smart Fibonacci traders, not only the smart individual Fibonacci traders, trading algorithm or trading algorithm will start watching this level here. Do you know that? A lot of traders that are following us know that. They say, George, move on, please. Haven't finished yet. All right, to be very patient with me, please. All right, we are friends. All right. Okay, so they will watch the level of 138.2% Fibonacci extension level. As you can see here, after all this year trending fails and a pullback, as the price was coming near that level, which is a very, very important hidden Fibonacci level, professional took profit there. They brought it there and they took profit. I want you to pay attention to another key level that I mentioned recently. Is the median line between the two Fibonacci key levels. So 138.2% is a one Fibonacci key level. The 100% here is a Fibonacci key level. You see the median line here. You can see that as the price was going to the ultimate target of 138.2% level, there was a midpoint target between those two Fibonacci key levels. You see how the professional took a little bit of profit at that median line. So you may say to me, George, I already know everything that you have shared so far. Give me more tips and tricks. So when the price goes above the prior high, you will draw the 138.2% level. You will draw also the median line. The next Fibonacci key levels above the 138.2% level is 200%. Okay, between the 200% and the 138.2% level, we have the 150% Fibonacci extension level. But there are more to this that we can do, all right? As I was showing to traders before, I think it was at the 24 Elliott Wave, all right? When we seize an impulse wave, all right, we can draw, we can measure the distance from here, you see here, all the way down. So which means from the starting point of the trending phase all the way up to the top here, all right? And then as the price breaks above it, apart from that Fibonacci extension level, we will project that. You see that huge measuring stick, project it up, and we can see the top of it. We highlight the top of that measuring stick, and we also highlight the median line of that measuring stick. The reason why, as a Fibonacci traders, we are watching that, so stay with me. I haven't finished here because I'm going to talk about Fibonacci patterns. So this is about practical Fibonacci trading tips and tricks, but I want to quickly highlight those things. So you will measure that distance or you project it on top. Remember that other traders will also do something like this. They will measure the pullback. You see the pullback from the top to where the pullback has stopped. And they will also use that as a measuring stick, drawing a line at the top of the measuring stick and also a line at the median line of that measuring stick. But you say, George, I know about 138.2% level. I know about the median line between Fibonacci key level. But you want to combine everything all together. When a financial instrument goes up from A to B, all right, and pull back like this, Fibonacci traders will also call this pullback what we call the XA. X for X-ray. And they will call this one A for alpha. Do you know that? So anytime a financial instrument goes up from point A to point B, not this A here, but from the starting point to the ending point of the trend, and then pull back like this, Fibonacci traders quickly, trading software, trading robo will call this one XA. But the next thing that is coming to their mind, apart from the Fibonacci extension and the Fibonacci media line, they are also thinking of Fibonacci patterns. I can assure you today, a lot of technical traders out there could have done better if only they spend a little bit of time to go into the mind of other technical traders, talking about Elliott wave traders, talking about fractal pattern traders, talking about harmonic pattern traders, those are Fibonacci pattern traders, and so on. All right, you will quickly, all right, improve your technical analysis because you will understand or you will be able to map out your chart. So looking at this chart straight away, I know straight away what has happened here because the footprint is here. You see this level here? I don't have to measure it, but I can tell you now, it's almost between the zone of 78.6% Fibonacci retracement level of that SA. The pattern that is being formed now, where we are now, a lot of traders here, why some traders sell at 138.2% level, is because of a Fibonacci pattern that we call the butterfly pattern. So when we are talking about butterfly pattern, there are more to that. A lot of traders will go into the comment section and say, oh, it's 161.8%, blah, blah, blah. Don't get into that because it's what they say, a possible reversal point can go above, it can go above, it can go above 138.2%, can go above 161.8%. Don't use it as a sign, don't use it as a theory, all right? So, all right. So here, a lot of Fibonacci pattern traders are calling this price move. You see here, A, B, C, D. They were doing that before. When they were here, they were calling this a bad pattern. So when the price was here, did that. Well, am I correct with the bad pattern? Bad pattern should be 38.2. So here, what the price was here, 88.6% of almost 88.6% of the SA people will be thinking of a pattern. All right, all right, okay. Now, price continue to go up. Now we are here. They are thinking of what? A butterfly pattern. So, as a Fibonacci trader, you want to know what's happening. So there are different types of Fibonacci traders. There are Fibonacci traders that are using only Fibonacci retracement and Fibonacci extension. That's what they are using. All right. There are other Fibonacci traders that are using the median line between Fibonacci key levels. All right. There are other Fibonacci traders that are using Fibonacci patterns, the Gartley patterns, the butterfly pattern, the bat pattern, the crab pattern, and so on. There are other Fibonacci talking about, okay, the GAN pattern. The GAN, those who are using Fibonacci GAN, not GAN, but GAN, all right? Okay, so this is what's going on here. So you want, as the price goes out from point a starting point to any point, pull back like this, you want to do exactly the same thing as A. All right. Start knowing the Fibonacci key level, the Gartley pattern. Gartley pattern, the retracement of this S from A to B should be 61.8% Fibonacci retracement level. All right. Between the B to C is between 38.2% up to 88.6% Fibonacci retracement level of AB. So go to www.dayportfolio.com, click on bat pattern, butterfly pattern, all right. But most importantly, you do search the playlist that we call Fibonacci pattern by dayportfolio.com. Don't watch anybody else, but watch it from dayportfolio.com because I want a little bit deeper. Now, you may be laughing, that's okay, all right. So that's where we are now. So right now, there are Fibonacci pattern traders that will be trying everything to sell this stock right here. Can you just sell? That's one mistake. So people will just go and buy put option to sell, or they will just sell. But is there a signal to sell? That's why we should use a different time frame trading method. So as a Fibonacci trader, once you map it out like this, all right, SA and all the rest, the 138.2% level, the median line, and so on. As I told earlier with traders, you want to start drawing channels and also putting Pitchfork tool on your chart. Because you know where are the Fibonacci key levels, you understand a little bit more what is happening, all right? Now you want to map out your chart, which means where are the hot spot trading zones? Can you see? Now that I put my Pitchfork tool on the chart, do you understand why the price did stop here, why it pulled back from the 138.2% Fibonacci extension level and was retesting the Pitchfork tool? You see now? The intersection between any key level and any moving averages is also a key level. It's also a hot spot trading zone. Do you know that? See this key level here, and the intersection between the moving average 20 and that key level is a hot spot trading zone, because the moving average is a dynamic support and resistance level because it's changing constantly. Now this horizontal resistance is a static resistance level. Now we have intersection of a dynamic key level and a static key level. It's a hot spot trading zone. It doesn't mean that definitely there will be something there, but we just know that it's a hot spot trading zone. It's possible that something may happen there. If nothing happened there, like here, nothing did happen here. It may happen later, all right? But you just need to know. So you will also place Pitchfork tool on your chart, all right? And then don't forget, you are a Fibonacci trader. Don't be only a Fibonacci trader. Be a better Fibonacci trader. Draw the trend lines. See here, connecting this point and this point. So at this junction here, what can we tell those American stock traders or investors that are trading Aflac Incorporated? We'll say to them, priority to bullish signal above the level of 47, 42, and priority to bearish signal below that level. So how do we handle that as a technical trader? We'll use a different time frame trading method. So on a higher time frame, we are at a resistance level, no question about it. Let's go now to the 50-minute frame. You see today, the market is open. Oh, now the market, the American market is still open now. You see here, people sold it there. So you on your 50-minute time frame, you see your stochastic was overbought here. All right. Why people did sell them is because of that 138.2% Fibonacci extension level on that monthly chart. They know, they are seeing the bigger picture. Right. So people were selling because the stochastic was overbought for a long time. But yeah, it worked. Finally, it worked here. Why? Because it's a major resistance on the monthly chart that is kaput. Are you getting it now? From the higher time frame to lower time. Now, so we are talking about monthly chart, top down trading method, and daily chart. So you see what's the price? Some people, somebody was asking about island. You see how the price gap up and just hang up here. So it's a trader. Is a bill that asked me top us some. I will remember to do that video about island, bullish island, blah blah blah. But it's just something here. You see, price gap out and it's hanging there, consolidating in that channel. Can you see that? That's what the price doing now. So people are selling on top. That's what's happening now there, and they are buying somewhere low here until it comes out of that channel or goes above it. If it goes above it, we measure the width. We can work with that, yes or no? We can just measure the width of that channel and project it up, mark a geometry, and then draw a line that is parallel. And anytime we have a new channel, okay, something like that, if you accept, something like that, and then we draw the media line of that channel too. It's all about knowing where there will be a reaction. So the market is about action and reaction. So those actions usually occur at a hot spot trading zone. That's why I say to you, if you are using any trading system or trading method, and they tell you that the signal, the bullish signal is this, the bearish signal is that, ask yourself, whenever you see that bullish signal, is he at a value support level? Or are you just taking a signal? Is he at a hot spot trading zone? What is the difference between a trading setup and a trading signal? What should one do after a trading signal? One should use another. So here now, you see we are on a daily chart. That candlestick bar on the daily chart will be closed at the end of the day today. We will have a candlestick bar passing to a key level. This one is bearish. So following day, we can drop down. We will examine what's happening. We come to the daily chart and see the bigger picture, what is happening here. All right, you see now? And then we'll take it from there. All right. See, so it's a consolidation, price gap up, and now it's consolidating, but it's in a rising, a tight channel. Okay, you see that? So those who are selling there will be expecting to take a midpoint profit at the median line of that channel, and the ultimate target will be here. So here we are. So it's not sufficient to use Fibonacci alone, Fibonacci patterns alone, Fibonacci extension alone. There are more work that we will do, like we are doing it now. So now that we put the Pitchfork tool on the chart, we can divide the upper level again. Beautiful. I love Pitchfork tool. You can call to me, you can talk about it on Twitter and say, George, love Pitchfork tool. You see, look what's happening here. The intersection between, you see the median line of the upper level of Pitchfork tool again. So we have now, not only that, the price was trying to retest that median line, and also we have a hot spot trading zone, which is the intersection between the moving average 20 and that static key level. So the reason why a lot of traders are giving up on the Fibonacci is because they are just scratching the surface of the Fibonacci trading. You want to go a little bit deeper. You want to add more to it. Combine it with Pitchfork tool, combine it with trend line. Do what I'm doing now. Don't use only Fibonacci retracement and extension. And you say, so what should I do now? All right. Combine it. Go into the mind, understand the Fibonacci pattern traders. As I'm showing you now, if it goes above this level, okay, the 138.2% level, we will be going to the mind of those who are trading the crab pattern. I'm not talking about Crusher combo. I know the American people love Crusher combo, but I'm not talking about crab that we eat. But it's a pattern, crab Fibonacci pattern. So now, Fibonacci trader, if it goes above the 138.2% level found support, they will be looking for, they will set their target at 161.8% level. At 161.8% level, if the price reaches that level, those crab pattern traders, those Fibonacci pattern traders will try to sell it again. They will try. We're not saying that the price will definitely go down, but they will try to sell. But as I've done here at the beginning of this tutorial, use the measuring stick, know all the different target level and the midpoint target level, as I did it here, and also from the starting point all the way to the top, map the chart. Every time you see two key level, understand that there is always the middleman, which is the median line. Push Pitchfork through on your chart. Continue to draw a line on your chart. You will be surprised what you can do with those simple trends. You see here, now I'm drawing another line on this chart. You will say, draw too many lines. Good. That's fine. It doesn't hurt. It helps. So you see, if you start coming down, we'll be putting. Another thing that I will say to you, for Fibonacci traders, all right, as I told you, you will become a better Fibonacci trader if you understand other traders. Now, very often, the reason why some traders could not move up to the next level is because they just want to do their own thing. It's okay to do your own thing, which is fine, but there are other market participants in the market doing other things. I believe it's important to know what those traders are doing. You see now, as I'm talking to you now, we were talking about Fibonacci, isn't it? Yeah? But an Elliott wave trader that is watching this chart, all that is coming to his mind, he will be saying to me, George, this is a flat correction that is likely to take place because this trend has been in place for too long. There is a high chance that we may see a move like this, 1, 2, 3, 4, 5, down. So you may say, George, oh, I wish I know that. And I'll say to you, go to 2-4 Elliott waves in plural, digit 2, digit 4 Elliott waves, and start playing with Fibonacci Elliott wave. It may not make sense to you, all right? That's how you can just start counting wave, playing with it. You may be wrong, you may be violating a rule, but you just want to familiarize yourself with it. That's how I start learning about Elliott wave myself. That's how I dig into it. So one day I wake up, I say, why some people are, what is Elliott wave? What are they doing? They start counting. So I say, oh, wow. One day I counted 1, 2, 3, 4, 5, the price went down. I said, wow. So I went deeper. Today I'm teaching people about Elliott wave. So here it is. You see here? So Elliott wave trader will be calling this, George, the point where we are likely to see the C wave of the flat correction. So those Fibonacci traders will be joining those Elliott wave traders will be joining, okay, the butterfly traders here and try to sell. So in order to investigate again, if you are trading a stock, American stock, Indian stock, British stock, financial history, any stock, I mean, do me a favor, my friend. If you are trading stock, you must learn to master the trading volume. You can quote me on Twitter about that. I say, George said that everybody that is trading stock must master trading volume. And I'll be happy if you do that, okay? Now, I'm trying to get your attention. All right? If you are trading stock, you must master trading volume. You see, this is what we call a surge in trading volume after the price pullback, almost in a zone of 78.6% Fibonacci retracement of this trending phase. All right, see that? All right, huge. The average volume, which is before in a zone, of 100 million share, look at that. 6 times that amount of the monthly chart, 600 million shares has been transacted. What are they doing? What are they doing? Are they buying? 6 times you should jump. What are they? Are they buying or are they selling? The price will tell you they were buying, of course. They were selling too long, and they were buying in 2009 when the S&P 500 was going up. That's what's going on here. Now, in order to know whether the price has a high chance to come down here, again, we will monitor the trading volume. Not much going on, a little bit push here. Those are Fibonacci traders activity here. You see this one here. Those are Fibonacci trading activity here. We'll just monitor it. Doesn't mean that the price will definitely come down. As I said, if it goes above the 138.2% level and find support, don't fight it. You can go to 161.8, 200%, and then all the other targets that we have placed on our chest. So this will conclude our discussion today about Fibonacci traders. Share more practical Fibonacci trading tips and tricks. I hope you will find the video useful. and that it will help you, okay, to improve, okay, your Fibonacci trading strategy, and most importantly, to become a better Fibonacci trader. All right. You find this video truly useful, so I'm going to draw a trend line on my chart for trader that are trading this stock. Those are the things that you need to know, our American friend. Am I speaking with my Texas accent today? Or my, which one? Okay. So you get it now? Okay. If you find it useful, please let us know by sticking your beautiful thumbs up. If you dislike it, of course, mark it down. That will put me under pressure to go back to my YouTube creator board and to improve my next recording. However, if you think that, George, you have done a very good job for the first time in your life, after blah, 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 feel free to share it with your friend on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, please subscribe to our channel today. It is free for now. It may become, oh no, it is free, always free, all right? And make sure you click on the notification bell so anytime we record a new video, you will be the first person to be notified. Until the next time, enjoy yourself and be very happy. We are the GSTW 24 traders talking about a Fibonacci trader share more practical Fibonacci trading tips and tricks. Happy trading to you all, and I will speak to you soon. All right. Thank you for watching. So I'm just doing something here for myself. If you want to hang around, you may do so. Otherwise, that's done. All right. Question mark. Or is it this one here?